All right, everybody, this is try number 3. We have definitely had some issues with this new system. And, well, hey, you gotta laugh at it. And it is operator error. I own, and well, we own this 100%. I guess it's me. I own this 100%. But it's whatever. Anyway, so here's the thing. We're going to get into 2023 predictions. We're going to talk about the market. We're going to talk about seasonality of what's going on. We're going to talk about what's happening here locally. So listen, at the end of the day, make sure that you subscribe. Listen, it's free information. Share this. Make sure that you send it about. Because look, if you're looking at making a really good business decision, well, you should be watching this show. And again, show the information. At the end of the day, everybody's talking about what's going to be going on, what's going to be happening next year. And really some of the information that's been coming out, like from Realtor.com, as you can see, home sales are, they're going to be on their way down. Heck, they're doing that now, okay? And they have been. Why? Well, part of it is seasonality. People are less inclined during the holidays to go out and look at homes. Just like we're not seeing a ton of sellers coming on the market, which again, that's not unexpected. So when we take a look at it, you can see here, the average of the last 7 days, we've got 576 homes that came on market. That's pretty good. Right about where we expected it. Actually, just a tad bit high. However, look at this. Our pendant, we're at 943. Average of the last 7 days. Buyers are still out buying. Why? Because rates have come down. Rates came down the last 3 weeks. We were at 7.25, and rates, I think rates right now, they're rolling at 5.95% right now. Non-owner occupied at 6.375. Listen, when the rates came down from the 7s down into the 5s and 6s, that's a big deal. Now, remember, we said that in Q1, we're going to see part of this change. We're going to see a lot of what we are talking about with basically what's going to be happening with mortgage interest rates as the Fed start to pivot a little bit, as we continue to get some better numbers and whatnot. People are going to be more aggressive as those rates come down. So really right now is without a doubt the best time because, well, heck, we have more. Let me throw this back up there. We have more inventory, as you can see right there. Make that a little bit bigger. Okay. We have 10,000 homes. Normally, however, normally we have about 16, 18,000 homes. We're still not at the pre-pandemic, the 2019 inventory levels. We're not there yet. We are like 6,000 below where we should be. However, when you look at it, you can tell that compared to last year, where we only had just shy of 3,000 homes, it is fabulous. We have inventory, and we are taking that inventory off. Again, when you come back here, you can tell we have more pended than we do having come on the market. If we take a look at the expired, pended, and canceled, when you look at those three, we're taking off almost 3x of what came on market. Almost, okay? That's pretty impressive. That means that buyers still see that there's value today. Heck, we're out with clients even today, out looking at homes. Why? Because it's a fabulous time to be in front of buyers or in sellers right now. So let's find out the why. Let's dive in a little bit more. So we had mentioned that we had this is their pictogram. Fannie Mae or Realtor.com came out with their numbers, okay? And it was super interesting because as we look at their numbers, there are some very consistent points that they're looking at what we should see, what we are seeing, and what we will see. And that's kind of our prediction for next year. And that is, one, you've got buying power is getting less. We're still seeing inventory starting to grow. Well, grow in the sense that it was growing before, but we've been actually shrinking a little bit over the last couple of months as buyers have been taking homes off the market and we're not replenishing it. Now, understand, we are also still seeing a price appreciation. Now, some of you are saying, wait, time out, George. Dude, there are homes that are for sale that are like $75,000 less than what they were this time last year. Okay. Well, understand that when you look at an escalated price versus a market value price, those are two different numbers. Because remember, when a buyer is willing to escalate, in their humble financial opinion, a certain amount higher, that doesn't necessarily mean that that was market value. When you look at list prices from where homes came on versus where list prices are at today, they're not that far off. And in fact, they're pretty consistent. And in fact, they're about 5 to 7% higher, which where we said that they would be, or very close to that, right? Next year, we're anticipating 4 to 6%. What is it? Realtor.com says they expect 5.4%. Well, that's pretty much right in the middle. So when you take a look at what the expectation is, listen, when we pop back and we take a look at this one right here, and we take a look at the amount of homes that are not available, okay, and I do mean not available, meaning we're still well below standard inventory levels that we've seen since 2015, 16, 17, 18, 2019. We are still, 5, 6, 7, 10,000 homes less. In fact, nationwide, they're saying that we are 2 million homes less on market than what normal is for us. That's a big deal. So a lot of the issues or constraints with why aren't we see even more? Well, one is seasonality. They're going to wait until we get to, probably February, March. And as you can see, the February, March markets are typically much better. Why? It's our spring market. They come back on, everything's fresh. Prediction is that we will also, again, our mortgage rates will drop down and it will be mayhem and bedlam. I'm just saying, okay? So when we pop back and we take a look at, again, what are these guys talking about? Mortgage interest rates still being in the 7.4, 7.25. Some people have said, hey, we're going to hit 10%. Nah, I don't see that. But will we be in the sevens? Yeah. Then are we going to start coming back down? Yes, we are. However, it's going to be a rocky road, and you absolutely, without a doubt, you have got to be dialed in. Get your pre-approval. Don't get a pre-qualification. Go all the way through underwriting, okay? Get that pre-approval so you are geared up and ready to go, okay? Affordability is still going to be a massive concern next year. So when we roll back and we talk about just what our predictions are, okay, don't expect inventory to grow. We're expecting inventory actually to stay very similar, come down a little bit. Spring market, it'll probably pop up, but not a ton. With that, look, it's going to be a neutral market. We're not going to see it heavily weighted towards buyers or heavily weighted towards sellers the entire year. We're going to have our pocket moments. When interest rates come down, it's going to be weighted towards the sellers. Because why? Rates came down, buyers are going to be out there, they're going to be pulling inventory off, we're going to see multiple offers. However, when the interest rates are on the higher side, hey, it's going to be more of a buyer's market, okay? That means that we're going to see the sellers being more negotiable, they're going to have to be more flexible, things like that, because then as we're going through each and individual cycles, really at the end of the day, it's going to be a neutral market. I don't expect much of anything coming out of that. New construction, right? Look, new construction is not going to, hit skyrocketing, even though, material costs have come down significantly, right? But there's a lot of risk, you see, because the cost of holding a plat, cost of developing plats, look, that doesn't change. That's a hard cost, man. That is a given. There are clients out there saying, George, look, there's been this 9-lot plat up the street, and it's been done for months. Yeah, I believe that. Well, why aren't they building on it? Because they have to clear other projects. They have to clear other inventory that they have before they start opening up another project, because again, that just incurs more holding costs. And if, again, those margins are super tight because they're having to give concessions, not necessarily on price, but sometimes on price. But, you know, there's a number of projects that we know that are offering $60,000 to $100,000 in incentives for buyers. Well, that comes right off the bottom line. You may not see it in the purchase price, but that comes off the bottom line. And between now and the end of the year, hands down, best time to buy a home, especially if you're looking at one of the big, you know, publicly traded companies out there right now. Without a doubt, the best time. All right. Some really good news. Okay. And some people might think this is kind of interesting. Listen, you know, new markets require a new approach. Okay. And again, for sellers out there, putting your home in the MLS. Okay. Listen, that's not marketing. We've been over that. We can chat as much as you want about that. And there's a number of sellers that we've met with who go, you know what? Totally get it. Absolutely understand exactly what you're saying. Let's talk in spring. Right on. Okay. Now, big news. We've got conforming rates that have changed. Okay. So they've actually gone up for Pierce, King, and Snohomish County. We're looking at basically $1,026,300, I think it is. It was $1,026,000, where you can put 5% down. You imagine that? 5% down on $1 million house. That is insane. But anyway, there you go. So we've got our new lending limits and whatnot. So that is going to be super cool when we take a look at, you know, everything that's rolling along, because it is, again, based on the medium you know, price points of each one of the counties. Pierce, King, and Snohomish County happen to be the higher ones. Super cool. Now, if you want to know a little bit more, if you would like to have, you know, a pictogram like this to give you guys a little bit more of what's going on, we also have our market update, which is done for December. I don't have it posted up here, but it again goes through where we're trending, where we're at. If you have any questions, please let me know. If you have any comments, please post them. We love to answer. We normally get back to you within about 30 minutes. And hey, look, remember, there's no strings attached, right? None. So when you guys are doing this, know that, hey, if you subscribe, that means you're going to be alerted when these market updates come up. We've got some really great information that is out there regarding vendors. We also just pushed out the most recent what to do when your power goes out during the winter. We had a number of calls and we helped some clients out that had issues when the power went out. Look, there's zero reason why you should be caught unawares. And right now, perfect time to fix these things. So go and take a look at that. If you need it, we'll go ahead and we'll post it down in the comments later. But in the meantime, you guys have an absolutely beautiful day. All the best to you and your family. Merry Christmas to everybody. And well, hopefully this thing worked out. I will see you on the next video. Take care.